Today's special edition of Inside Story is sponsored by WisFis. Where there's a WisFis, there's a way. Visit wisfisbank.com to get started.
Hi, I'm Gina Gannon, and welcome to Inside Story. We've been hearing so much in the news lately about inflation, record high gas prices, and a boom in the housing market. But what does it all mean for you and your personal finance? Today, we'll learn all about money management from WisFis bank experts Jeffrey Rubin, president of WisFis Mortgage, and Jennifer Dempsey Fox, president of Bryn Mawr Trust. We're going to first start with Jennifer Fox, and Jeff will join us later in the show. So, Jennifer, thank you for being here. Please tell me, will you share some resources out there to help us with managing our money?
Thank you, Gina. There are an abundance of resources available to hone your money management skills. Things like online articles, resources like the WisFis Bank Knowledge Center, to podcasts and budgeting apps, to scheduling a financial checkup with your bankers and financial advisors. We do recommend, though, that when looking online for resources, especially social media sources like TikTok, Facebook, and Reddit, make sure they're from a reputable source with financial training and expertise. The most important thing is to identify which resources work best for your preferred learning style and to build a plan you can put into action. But what we also find is that in addition to all of these resources that you can look to and read about, what's really important is having that open dialogue about finances. Talking about money is hard, really hard. In fact, studies have found that money can be viewed as a topic that is more taboo than sex, mental health, and politics. And we all know how hard sometimes those conversations can be. And so we know that avoiding a money conversation can actually cause more financial anxiety and make it more difficult to achieve wealth. So whether it's with your spouse, partner, friends, family, or your local banker, having open and candid discussions about finances and what tools you need to succeed can go a long way in broadening your own money management skills, while also passing on important lessons to future generations. I think one of the most important things, though, is to really understand what's your learning style. Do you like to do your own research? Do you like to listen? Do you like to ask a lot of questions? And then work with those banks or financial service providers where you can feel that somebody is meeting you where you are and that you have access to the tools that you need to implement those solutions. And so that's something that is, it's a learning process, and we know that. And as someone who's been in wealth management for most of my career, I appreciate that these are hard conversations. And so know that we understand that and are here to help all the time.
I love that, Jen. Thank you. And, communication in every relationship is key. So I really appreciate you saying that. When considering how to manage your money, let's discuss investing. With the threat of inflation, what should people know about handling their investments and doing that by making the best investment decisions?
So I think some of the misconceptions about investing is that you have to be rich to invest, or that you have to be incredibly sophisticated, or that when you invest money, the stock market always goes up. So I think getting over some of those misconceptions is really important. But right now, when we're looking at investing during inflation, and it's something that's being reported and is a real threat as we look at our economic environment, it's definitely been front and center in the news the past year. And so we see that with anyone who has tried to purchase a used car, a home, or even a gallon of milk or gas can attest to the market increases. And so while we know that increased inflation may put a dent in your pocketbook, it's also something to consider within your investment portfolio. What we know is that it's a worrisome time. but you shouldn't let it materially impact how you invest your portfolio. History has shown that in the long run, stocks continue to move up and have positive gains. And your investing principles should remain virtually unchanged regardless of the inflation rate. Clearly, keep some cash on hand for emergencies and short term expenses, with the rest invested in a balance of stocks and bonds, depending on your time horizon and work and risk tolerance. I firmly believe in building a financial plan and working through a long term plan that helps you navigate the ups and downs, not only in the stock market, but the ups and downs of inflation that can cause more concern without a plan.
And I think that's key. We've been seeing inflation. I mean, it's sky high right now. Gas prices are high. The cost of goods is high. So I just think it's really important for people to start investing in their retirement. So for people who have been contributing to a retirement portfolio, Jen, is there a certain point in time where they need to be actively involved in reviewing it?
So I think active involvement needs to happen from the very beginning when you first start your first job and start contributing to a 401k or begin setting money aside. I think having a regular review of your portfolio helps you understand how your savings are working for you. But I think, especially right now with inflation as it's happening, having that long term view, staying invested, and staying confident makes sense. What we know is that with this volatility, that we may have a market downturn, and for a period of time, your portfolio may be lower than before, but you don't have to sell. And that way you don't have a locked in loss. What we have seen historically is that the market has recovered with time and account balances have moved higher. If you have the means, you should continue to invest during a market downturn and especially to increase your retirement savings. And that's if your time horizon is more than 5 years, meaning that you're more than 5 years away before you start looking at actually retiring. Over the last 50 years, rolling 5 years returns for the S&P 500 have been positive 92.28% of the time. So what we know is that most investors have a target asset mix. And what that means is the types of assets that you're invested in, of stocks and bonds based on your age, your risk tolerance, meaning how do you feel when the market goes up, but more importantly, how do you feel when the market goes down, as well as other factors. And normally, when one class of assets is declining, another is rising. And so if you rebalance your portfolio regularly, meaning take some investments that are performing really well and rebalance it into other asset classes, you can get a good asset mix and have a really nice risk-adjusted rate of return over your lifetime.
Jen, thank you so much for these great money management tips. But now let's switch gears to women and investing. I know that my husband and I, we have a fundamental difference when it comes to how we invest our money. So in your experience, have you noticed any differences between men and women in regards to how they invest their money? And what tips can you provide for women to take better control of their financial futures? Because I'm sure my husband and I aren't, I'm sure we're kind of more like the rule out there.
And Gina, you are absolutely right. And what we have found is that, and this is a very generalized view, but studies have shown that there are definitely differences in investing attitudes between men and women. Some of that has come from the fact that women have acknowledged feeling less confident in their investing abilities as what makes them more cautious investors. But I would say that caution has actually led to more positive risk adjusted investment returns for women than for men. And so it's something that building that confidence is incredibly important. And that's what I have seen over time. And in all of the work that I've done with women, I've seen that confidence build. There's a different partnership with women and making sure that women are part of that conversation without a doubt. Women should absolutely feel confident asking questions. We are in an industry, and I'm in an industry that uses a lot of acronyms, a lot of specialized verbiage that actually has real language, real English explanations. And if you're not clear in what an investment advisor is saying, say, wait, can you explain that? And I think that knowing that confidence is out there without is really a big shift that we've seen, and it's a big positive shift. And here's why it's important, especially for women, to have confidence investing, that women in particular are impacted by the compounding effects of the wage gap. So statistically, white women earn about 82 cents for every dollar a white man does. And for women of color, it's even a bigger discrepancy between 55 and 63 cents of each dollar that a man may make. And while we talk about the wage gap quite a bit, what we don't talk about is the impact on that lack of income on retirement savings. So on average, women will prepare more for the future because they've taken that planning and cautionary approach, but they'll still have about $400,000 less in retirement savings than men. And so while there's no blanket right or wrong investment plan or strategy, the most important factor is that women really feel prepared to take ownership of their financial future.
Well, Jennifer Dempsey Fox, president of Bryn Mawr Bank, thank you so much for joining us. We'll be back with more information all about mortgages and investing. Welcome back to Inside Story with our money management experts from Wisfis Bank. Another top headline these days is the housing market boom and the impact inflation is having on it. Jeff, let's turn to you and start off by discussing what are the impacts of inflation on buying a home right now? We hear so much out there. There's so much misinformation.
Yeah, absolutely, Gina. And inflation has been the big headline grabber now for a few months. And in fact, if you look at inflation a little closer, you'll see the leading components of it are housing and energy. And the two items that we deal with every single day of our life as we fill up our gas tanks and as we pull into our home or our rental unit to spend the night or have dinner or live. And both of those are actually increasing very, very rapidly since the beginning of the year. Housing market has experienced nearly a 20% rise year over year in the price of a home. And it is making this housing market more challenging for the average American because it's becoming more expensive. We have, a challenging environment. The demand is still very strong, but, the prices are rising.
We hear so much that it's a buyer's market, it's a seller's market. You shouldn't sell your house now, or you should. There's a lot of information out there that I really am happy that you're going to be clearing up today. And, inflation, like you were mentioning, it's been creeping up for years and it's becoming more difficult to buy or rent. So what can homeowners do now to be able to afford a home?
Certainly, yes. And we've actually in the mortgage space have a sort of a double impact today. Inflation, as we just discussed, home prices rising, but we also have a rising interest rate environment, which makes financing those homes even more expensive. These are all actions and events that frankly are out of our control. We as individual borrowers can't control the rate of inflation. We can't change the direction of interest rates, but there are things we can do that prepare us and make us a better borrower. And a better borrower is going to mean a better interest rate. And the better your interest rate, whether it's an eighth or a quarter or even more, will result in substantial savings. It can be hundreds of dollars a month, and over a 30-year mortgage, it will be tens of thousands of dollars you can save by having good credit, making sure your payments are being made on time, and saving up for that purchase. Those are all things that are well within our control, whereas inflation and rising rates necessarily aren't.
And I guess it's important for people to know what they can do if they want to pre-qualify to find their new home. Could you share some information on that, please?
Yeah, sure. Do your homework, being prepared, and having all your financial house in order is going to make you a more attractive borrower and give you an advantage, an edge in this very competitive housing market. And part of that would be working with a local lender to get pre-qualified. At Wisfis Mortgage, we have a whole staff of very seasoned, experienced mortgage loan officers who work with our borrowers well before they're under contract, well before even they're starting to look. These are the smart buyers who know how important it is to be pre-qualified, to be able to demonstrate to those potential sellers of homes that you've done your homework, you're a serious buyer, and you've already worked on lining up your financing. It creates more certainty for that particular home seller to work with someone who's done that kind of home.
And the home buying process in general can be very intimidating. So I think it's great to know that we have the resources there and someone to kind of walk us down the line. So thank you for sharing that. So then, Jeff, tell me, what's your recommendation for home seekers who are on the fence about continuing their search now or maybe contemplating waiting the market out? We hear so much out there.
Yeah, there's a lot of information out there, and frankly, we've also lived through a period of time. If folks remember back in 08, 09, and the housing bubble, where home values actually went down, and it took us many years to recover from that downturn in prices. And so some folks have that memory and are saying, "Well, let me wait this hot market out, and maybe prices will retreat." What we're seeing and what the experts in this industry see as well is a very different market than in 08, 09. That was a housing bubble that was created by some loose underwriting standards. Home ownership was at all-time highs, and it was a different economy. This current housing imbalance of demand greater than supply is really a result of this 2 years that we just went through, a pandemic where people were not moving, homes were not being built. So it's more fundamental, these price increases, and we do not see home depreciation in the future. We do believe home appreciation will slow, and we're starting to see evidence that today, but not a retreat in prices. So the long and short of it is, the longer you wait to make that decision to purchase a home, the more expensive it's going to be. So we are recommending people, if they are financially prepared and they have found a home, it's probably not prudent to wait, because that same home that you're looking at and they're desiring will cost more in the future as a result of home appreciation, as well as potentially higher interest rates.
And the houses seem to just go like that. So that's definitely true.
Yes.
So then, Jeff, what are you seeing in terms of trends in the housing market in our tri-state area?
Right. So, I think that, when you mention the tri-state area, and it's always important to remember, housing is obviously a very localized a factor. So we hear about national averages, we hear about what's going on in Florida or California. We actually live in a very, very unique area in the Northeast, and Philadelphia, right smack in the middle of that, is somewhat conservative. We have not experienced a crazy price appreciations that you've seen in the sand states, they call them, Florida, Nevada, California. Um, but at the same time, we have not experienced the great and dramatic decreases in value that those same areas had in the past. So we're somewhat of a bargain, a more stable, a more mature housing market, which is favorable for most home buyers. So we do see that home values are increasing in this area and will continue to increase, but at a much more manageable rate than we currently experienced over the last couple of months.
Yeah, thank you. And Jeff, you've given us such good information about home buying and for being financially prepared to buy a home, including the importance of having a down payment. So for buyers that need help with down payments and closing costs, what options are out there for them?
Yeah, so there are so many home mortgage products out there that are tailored for buyers and home buyers' specific needs. We even are very proud of a couple of programs that we have at WISFIS, and other lenders have them as well. We have a program called Neighborhood Opportunity, where we make special loans, higher LTV loans, less down payment needed to purchase a home, and some relaxed guidelines for homes that are located in low to moderate income census tracts. These are neighborhoods in the Philadelphia area are very exciting and a lot of activity occurring. And we're helping promote that by making home affordability much more reachable in those areas. And it's not just for the census tracts, but we also provide these programs for folks that are in the low to moderate income, where their current yearly income does not exceed a certain limit. We do have these grant programs, the neighborhood opportunity program, and a lot of tailoring that goes into helping people afford homes.
Thank you, Jeffrey Rubin, president of Wisfis Mortgage. We'll be back with more Inside Story.
Today's special edition of Inside Story was sponsored by Bryn Mawr Trust, your connection to a life fulfilled. Take your next steps today by visiting bmt.com.
Welcome back to Inside Story. I'm Gina Gannon. Jeff Rubin and Jennifer Dempsey Fox, we heard such great information from you today, and we only have a few minutes left. Could you please share your last bit of advice for our viewers looking to take better control of their financial future? Jeff, we'll start with you.
Yeah, thank you again, Gina, for this opportunity. It's a great message to be able to get out to everyone. We talked about a lot of things that we can't control: inflation, rising home prices. But as a mortgage borrower, there are things you can do that will directly impact and put you in a better financial position. You want to be a top tier mortgage borrower. You do that by managing your credit, making sure your credit card payments are paid on time, managing your credit card balances. Do not let them rise out of control. Show stability of income. It's very, very important. And finally, save. If you can save, every dollar you're able to put down on the home is going to result in a larger home that you can afford and make the house more affordable for you by putting more equity into it. So
Great.
it's the basic tackle and blocking kind of ideas, but it will save you a lot of money if you can do those things.
Great, Jeff. Thank you. And Jennifer, your last bit of advice?
Sure. Really, three key things. The first one is make a plan, make a financial plan, act on the financial plan, and review it regularly. Number two, save early and often. As you just heard from Jeff, it has so many benefits, not only in purchasing a home, but in your retirement future. The market does increase over time and your investments will grow. And finally, talk about money. Be confident in having your money conversation, whether that's with a banker, a financial advisor, a financial planner, even your friends and family. Having that discussion early and often as well will help you find more resources and give you more confidence as you build out your financial plan and have a stable and secure future.
Really great information. Thank you both so much for joining us. Thank you, Jeff Rubin, president of Wisfis Mortgage, and Jennifer Dempsey Fox, president of Bryn Mawr Trust. Thank you so much for joining us. Please also check out our latest 6ABC Town Hall, hosted by Action News reporter Jillian Mealy, titled "It's Okay to Talk About Money: Tips to Financial Success," sponsored by Wisfis Bank. It's available now on 6abc.com and our free streaming apps. For more great information on money management and home buying, I'm Gina Gannon. Have a great day.